Hi! In my previous video, I have talked about the 5 major accounts of accounting. These are the 5 major accounts of accounting as previously discussed. In this video, I will talk about the common account titles of the major account, which is asset.
Specific accounts, assets. So why do we need to classify specific accounts? We need to specify asset accounts so that we can know the breakdown of assets. Because there are many assets, we need to identify them specifically in order to manage it well. We need to manage well these assets because these assets are the source of our income. Remember, assets are useful, right? We use assets in order to have income in our business. Specific accounts are further classified into 2 categories: current assets and non-current assets. Let's start with current assets. Current assets are assets that can be used up, sold, or collected 1 year after the reporting date. Now, I will discuss common account titles of current assets. The most common current asset is cash. Cash includes paper bills, coins, checks, bank deposits of the business. Cash is the lifeblood of our business. If we don't have cash, our business will not run. We use cash so that a business will have income. Therefore, cash is an asset. Current asset. Next is accounts receivable. This is the debt of your customer from you on buying your products or services. When a customer buys a product or services from you, then he or she will pay you later. In result, you have accounts receivable. Accounts receivable later on is converted into cash when you collect it from your customer. Now, cash is an asset, right? Accounts receivable is also an asset. Current asset. Another current asset is called inventories. These are materials that are for sale or used to make products for sale or consumed in sale of your service. In short, these products are for sale. Inventories, once sold, are converted either into cash or accounts receivable. And ultimately, after the accounts receivable is collected, it is converted into cash. Now, cash is an asset, right? Inventories are also an asset. Current asset. The last current asset that I will introduce to you is supplies. Supplies are items that are used in support of the business so that the business can have an income. These supplies are used directly or indirectly to produce income of the business. Now, these are examples of supplies. Now, we will discuss about non-current assets. Non-current assets are assets that can't be used up, sold, or collected 1 year after the reporting date. In other words, if an asset is not a current asset, it is a non-current asset. The most common non-current asset is called PPE, or property, plant, and equipment. Examples of non-current assets are buildings. As you can see, building is an asset. Building is used to make income for the business. And building is used up more than 1 year. Building is considered as an asset and a non-current asset. Another example of a PPE, or property, plant, and equipment, is land. Land, obviously, is a useful thing. And in business, land derives income. So, land is classified as an asset. It is a non-current asset. Another example of a PPE, or property, plant, and equipment, are machineries. Machineries are useful in the business. They derive income for the business. Machinery produce inventories, and inventories in return produce cash. Machineries are used up more than 1 year. Machineries is considered an asset, a non-current asset.
So there you go. I have discussed the common account titles of the major account, which is asset. By this time, I hope you have an idea of what is a current asset and a non-current asset and what are their differences. Now, there are many specific current and non-current assets. Please take note that a company can have as many current and non-current assets as much as they want. That depends on their needs and the definition of those assets. Just remember to properly classify an asset as either current, which is sold, used up, or collected within 1 year from the reporting date, or a non-current asset, which is if it is not a current asset, then it is a non-current asset.